The Bank of England held interest rates at a 15-year peak of 5.25% on Thursday. Britain's central bank further said it didn't expect to cut rates anytime soon as it fights the highest inflation of the world's big rich economies. The bank said borrowing costs would stay high and more tightening would come in future if needed. Central Bank Governor Andrew Bailey.
There is absolutely no room for complacency. Inflation is still too high. We will keep interest rates high enough for long enough to make sure we get inflation all the way back to the 2% target. We will be watching closely to see if further increases in interest rates are needed. But even if they are not needed, it is much too early to be thinking about rate cuts.
Thursday's decision means Britain, the European Central Bank and the US Federal Reserve have all kept rates steady. The Bank of England has said it's determined to curb the risk of a spiral of higher pay and prices. Britain's inflation has fallen from 11.1% just over a year ago to 6.7% in the most recent data. The central bank said it now expected the economy to have flatlined in the July to September period. It projects growth of just 0.1% in the fourth quarter, with a zero growth forecast for next year. Looking ahead, investors believe the bank has reached the end of its run of rate hikes, given the risk of a recession. Market watchers had bet the bank would keep interest rates on hold until at least August next year, when it would probably start to cut them.